Okay, so the Indian market is absolutely on fire right now, hitting all-time highs. But you really got to look beneath the surface, because if you do, you'll see something fascinating is happening. We're seeing this massive split, the emergence of two different Indias. One is set to boom, thanks to a huge trade deal, and the other, well, it's facing a crisis from a technology that could change everything.
And here's the number that just screams euphoria, right? The BSE Sensex blasting past 84,300. Now, this isn't just a market high, it's a massive wave of confidence, with investors just pouring money in. But here's the real question. What are they really betting on? Because I'll tell you what, it's not the whole story, not even close. And that's the central mystery here, isn't it? If the market is so hot, why are we hearing warnings that India's crown jewel, the IT sector, is apparently staring down the barrel of a hurricane? To get that, you have to understand these two incredibly powerful and opposite forces at work. All right, so first, let's talk about the good news, the tailwind. This is the huge positive force lifting up a massive part of the Indian economy. We're talking about a landmark trade deal with the US, and this thing is a total game changer for India's old school traditional export sectors. I mean, just look at the difference here. It's a shift from total chaos to, well, predictability. For what felt like forever, Indian exporters had this dark cloud hanging over them, this threat of sudden, just crippling tariffs from the US, sometimes hitting 50%. This new framework just gets rid of all that. It creates a stable, predictable system, and it's capped at just 18%. That giant cloud of anxiety, it's just vanished. But wait, it gets even better. It's not just about capping the tariffs. For some absolutely critical industries, the proposed tariff is zero. Zilch. Just think about that for a second. We're talking pharma, gems and jewelry, aircraft parts, all of them potentially getting a duty-free golden ticket to the biggest consumer market on the planet. This is a direct shot of adrenaline to their bottom line. Okay, so while the manufacturers are popping the champagne, a totally different story is unfolding on the other side of the economy. A massive headwind is building, and it's about to slam into the tech sector with the force of what analysts are now calling the anthropic shock. So what is this anthropic shock all about? It's this new flavor of AI coming from companies like Anthropic. Now, this isn't the AI that helps you draft an email. This is called agentic AI. Yeah, don't think of this as an assistant. Think of it more like a digital employee that you can hire. An employee that can plan and run entire projects all by itself, from start to finish. No human needed. And you can see how this is just a direct missile aimed at the heart of the business model that made Indian IT so powerful. For decades, the model was the human pyramid, right? You bill clients for the time of thousands and thousands of engineers. Agentic AI just blows that up. I mean, think about it. Why would you pay for a whole pyramid of human engineers billing by the hour when one single AI agent can get the job done and you just pay for the outcome? And listen, this is not some far-off sci-fi thing. This is happening right now. Big-time brokerages are already putting some pretty scary numbers on it. Motilal Oswal's estimate is jarring. They think we could see up to 12% of the entire industry's revenue just evaporate. Poof, gone. Over the next 4 years as clients just switch to these AI agents. So, how did the market react? Well, it was swift and it was brutal. Investors saw the writing on the wall. The Nifty IT index took an absolute nosedive, wiping out nearly 2 lakh crore in investor wealth, almost overnight. This wasn't just a bad day at the office. This was a massive vote of no confidence. The fear out there, it is absolutely real. So let's put it all together. You've got this huge tailwind pushing manufacturing forward and a hurricane-level headwind hitting tech. And what happens then? Well, smart money doesn't stick around to see what happens. It moves. And this is what the pros are calling the Great Rotation, a huge shift of money away from the danger zone and into the new opportunities. And you don't have to look hard to see it happening. Look at this. Money is just flooding out of IT services. So where's it all going? It's pouring straight into the old economy, infrastructure, banking, the exact sectors that are getting a boost from all that government spending and, of course, that new trade deal. It's a fundamental reshuffling of the entire deck. And you know who one of the biggest winners is in all this chaos? The Bombay Stock Exchange itself. Their profits have just exploded, up 174%. Why? Simple. All this shuffling, all this volatility, it means a ton more trading is happening. And more trading means more money for the exchange. Then you look at the infrastructure side of things. Take a company like Railtel. They just landed this massive order for the Kavach railway safety system. This is a perfect example of that physical asset theme playing out in real time. The government is spending big bucks to build and upgrade India's infrastructure, and companies like Railtel are right there to catch the contracts. So, what does this all mean for you? Well, it means the old playbook for understanding the Indian market, you might as well toss it out the window. This great divergence has created a whole new set of rules for anyone trying to figure out India's economy. So what's the new playbook look like? Well, the advice from analysts is pretty clear. You want to be overweight on the companies that are actually building physical stuff. Infrastructure, power, capital goods. You want to be accumulating the cyclicals that love this environment, like banking and real estate. And here's the big one. You rotate out of those big legacy IT firms, and you rotate into those niche exporters, like pharma, that are just riding that awesome trade deal tailwind. And really, that's the bottom line here. For decades, when you thought about modern India's success, you thought about tech. But that story has completely changed. The baton of leadership, it's been passed. The new drivers of the market are the builders, the manufacturers, and the financiers. And that leaves us with one last kind of ironic thought to chew on. It's technology itself, this new AI, that's disrupting the tech sector. So you have to wonder, is India's future, its next big growth chapter, going to be built with concrete and steel instead of code?